experiment in Alaska shows the production curve of oil from the North Slope. And it's shorthand for Alaska's economic future is uncertain. Everybody's very concerned about that, and certainly the Institute of the North is very concerned about this. Well, Abel would have it fixed if he knew that we haven't figured out how to deal with this yet. So we went over to Norway because we've been hearing good things about how Norway, a similar oil and gas rich place, similar quantities of reserves to what Alaska in its offshore area has, is not facing this kind of a production curve. We went over there to find out if that was true, and if so, how have they made that come to pass? As I said, we had a bunch of legislators with it, and this is the way they look at the world. This is a couple of bars. The vertical bars are the state budget, and the green dots above it connected are revenue, projected revenue from our oil and gas, or all of our revenues. And you can see that we're looking at 7 years of good times, and at some point there, 7, maybe 10 years out, depending on the price of oil, we start facing some difficult times. That's what they're looking at, and that's what they're hoping to find some ways to fix that situation. A little bit about Norway. Here's a map of Norway. Off to the right of that would be Sweden and Finland, and off to the left is the Atlantic Ocean. I've superimposed on here some Alaskan towns. We were spending most of our time in Oslo, which is their main city, right there in the south, and that's just a little bit south of where Anchorage would be latitude-wise. Another major city is Trondheim, that's about the same as Fairbanks. And we did spend some time up here in a town called Hammerfest, their farthest north community, which is roughly the same latitude as Barrow. Has a long coast and has those gorgeous fjords that you've heard so much about. This is where we were going to have our meetings. And you may recall that in the middle of last summer, a horrible situation occurred where a person who wanted to make a case about a political issue took a truck bomb right into the government section there, exploded it. That was actually a decoy. We then drove 20 miles north to an island where there was a summer camp of young Norwegian people and shot 70 of them. Nonetheless, we thought our tour was over at that point. The Norwegians said, no, we really want you to come. We want you to be here. It's a good time to come. They rearranged the entire schedule. We had our meetings with the top ministers of many of the departments in other buildings. They completely rearranged the itinerary. They were incredibly hospitable. They were very glad that we came. They were very glad that we could be there and share with them at that particular time their grief and their contemplation about what that tragedy meant to them. This is a picture I took of downtown. It's a terrible picture. It's really late, and it's taken with an iPhone. But what you see in the foreground, that white building, is their fairly new Performing Arts Center, which is a $500 million building, I'm told. It is a huge building. But what really caught me in this picture wasn't that building so much, was the construction going on behind it. Everywhere you looked in downtown Oslo, this was pretty much the scene you had. These were private sector construction going on. There were anybody that had anything to do with oil, with gas, with finance, well-to-do people setting up their nice apartments along the waterfront. This was what was being built, and I showed this picture to my wife, and she said, boy, it looks like kind of like Beijing did. But it's just a boom place, extraordinarily prosperous. Some statistics about Norway. It's not a very populated place. It has slightly less than 5 million people. That's about the population of one state, about Minnesota. They joke say, half the Norwegians are in Norway, the other half in Minnesota. But how many here are Norwegian or have a Norwegian member of the family? Raise your hand. That's a pretty good percentage. There's a lot of Norwegians in Alaska. The significant takeaway here is 7 times the population of Alaska. It's still a pretty small population. Tried to get some sense of their relative personal wealth or income, and you can see, oh my gosh, look at that. 88,400 compared to 43 for Alaska. That seems like a slam dunk that they've got a lot more money than this, but it's not so simple. We learned that a dollar, well, it doesn't go very far over there. I said we were a sober bunch. The first night we went out, we went to a restaurant and had to all pick up each our own liquor tab. And one beer was $18. That's why we were sober. Pure economics. And a big part of that high cost is they have a very high sales tax. They call it a value-added tax, and 25% on most goods. So very, very high. And they also is famous for they have a pretty substantial personal income tax as well. So I tried to get a better sense of what's the wealth in terms of what they can buy compared to what we can buy. Who can buy more stuff? So that's what that next line is. The PPP stands for Purchasing Power Parity. That's after taking inflation in account of inflation and taxes. I could not find a Alaska number, but I did get the Norwegian versus the U.S. And you can see that Norway, despite all those taxes, has more wealth per person than the U.S. And I suspect, because here we don't have a state income tax and our income's pretty high, that we're probably pretty close to Norwegians. They may be a little higher than us. Unemployment rate, probably the lowest in the developed world. They have to import their much of their labor to build some of all that construction you're seeing going on there. A number we're all familiar with, the amount of our government paid for by oil and gas revenue. There it ranges from low of 10 to a high of 26%. Here it's of course 80 to 90% of our state government is paid for by oil revenue. Just so you know, they are a democracy. They have a unicameral parliament. They don't have an upper and lower house, just one house. We went on a tour, and the tour guide said, "This is a wonderful, welcoming place. Any Norwegian is welcome to come here and watch us make laws, except for one. The king. They have a king. And the king, by law, is forbidden to participate in the making of laws. He's very popular." Now here's a real eye-opener for us. Norway, as you may have heard, has their own version of a permanent fund. What we didn't realize was how big it was. The big bar is theirs, the little bar below it is ours. Ours is about 40 billion, and we should be very proud of that. We've done a very smart thing in putting that aside. The Norwegians have done this a couple times better. They put a lot more aside, and they anticipate that by the time they run out of oil and gas, they're going to be $3 trillion. That's permanent. That's serious. Now notice, if you can read the fine print there, right here, their first deposit was in 1996, ours was in 1977. Between 1996 and now, they produced 12 billion barrels of oil. We produced 19 billion since 1977. So how did they do that? How did they do that? Well, that was one of the mysteries we went over there to learn. We'll come back to that. If I forget, somebody please ask the question, how did Norway come up with such an enormous permanent fund? So our tour focus was on Norway's investment in energy. It was in two phases. One, we did take a look at their hydroelectric, which is primarily for domestic use. And of course, the primary thing was to look at their oil and gas development, which is largely for export. Quick summary of what we learned. Unlike Alaskans, Norwegians aren't in the least bit worried about their economic future. They are sitting in the catbird seat. They're loving it. It's just not even on their radar screen to worry about it. They have abundant, affordable electricity all over Norway, from the bottom to the top. We of course know that that's a big issue out in our rural communities. They have a lot. We'll talk about that. Critically, the third bullet, they have stopped their oil and gas production decline. They too peaked. They too went into decline. But unlike us, they have arrested that decline at a high level of production. How they do it, fourth bullet, Norway attracts investment capital with investment incentives. And we're going to talk a great deal about that as we go through. First, electricity. Hydroelectricity is what powers homes, hotels, businesses, everything. 90+%, 95+% of their electricity comes from hydroelectric dams. They've been doing this for 100 years. There's a picture of one there that's from 1906. It's still producing. It's the foundation of their modern economy. They have very inexpensive power. Their old dams still producing. They were overrun by the Nazis in World War II, and as part of their getting back on their feet, they received Marshall Plan funds, as every European country did, and they spent their Marshall Plan funds on building more hydroelectric power. They wanted to have affordable, lots of affordable power. And as I mentioned at the bottom here, they use it for heating. I know that's an issue here in Fairbanks. Heating is very expensive here, and over there they do it with electricity, because their electricity is so cheap they can do it with electricity. They have a grid that connects all communities. They're very proud of the fact that even the most remote farmstead, as they call them, has power to it. And accordingly, their electric costs are pretty similar all the way across the state, or the country. And they've managed to do this, all those dams, even with Norway's valuable fishing industry. How did they do that? You know, we worry about salmon stocks being impacted by dams. Europe, it turns out, fished out its native salmon stocks in the 1800s. So at the time they were putting in the dams, it wasn't an issue. Interestingly though, Norway now exports, we claim, 34 million 6-ounce portions of salmon 365 days each year. Every day they do that to Europe. They have one of the largest salmon export business in the world. Fish farming. On to oil and gas. As I mentioned, their oil and gas is primarily for export because they use electricity in the country. They are the world's 6th largest oil exporter. They are Europe's 2nd largest gas exporter after Russia. This map, I hope you can make this out. There's Norway there on the bottom right, and there is no oil and gas onshore. Sort of like southeast Alaska, beautiful mountains, no oil and gas in those mountains. It's all offshore, and that bluish gray area is their continental shelf. They have an enormous continental shelf because of their islands. That continental shelf, along with their mainland, gives them a landmass very similar to Alaska. These sort of purple hatched areas, there's 3 of them. That one there is the North Sea, where they first discovered oil on Christmas Day, 1969. What a nice Christmas present. Just months after we discovered oil on the North Slope. Moving farther to the north is the Norwegian Sea Basin, where they have been working in there heavily since the 1990s, very active area now. And most recently, now, they are doing a lot of work off the northern parts of Norway, the Barents Sea. This line right here is the demarcation line between their part of the ocean and what Russia owns. And Russia and Norway are very actively right now starting to do exploration in the first bit of production in that area. Because it is offshore, it is all 100% owned by the Norwegian government, very much like offshore oil and gas in this country is owned by the federal government. Now I'm going to ask you to take a look at these 2 charts. The one on the bottom is the one I showed you earlier. That's Alaska's production curve. The one above it is Norway's. The dark blue is oil, the green is gas. We have no gas yet coming off the North Slope. But you can see ours took a quick run up, peaked fairly early, has been running out. Theirs came on more gradually, gas came along with it. They peaked much later, and at a substantially higher level than ours. They peaked at about 3 million barrels a day compared to our 2. And they've been coming down, but it's not as steep as this is. If you look at this section right here, you'll see it seems to have flattened. And this is what they're talking about, their production decline delay. And they anticipate they can continue this out flat for another 10, possibly as much as 20 years. And that's quite significant because you'll notice that our big volume was here in an era of relatively low prices. Their big volume is here in an era of high prices. Nice. Okay, other thing we learned, Norway has far more jobs in the oil and gas sector than we do. According to their Ministry of Energy and Petroleum, they have 235,000 jobs in the oil and gas sector, directly and indirect. Our Department of Labor claims 25,000. That's a huge, huge difference. How did that happen? How are they keeping that all going? Well, one of the things that they did to start this off was a company called Statoil, that translates into State Oil Company. That's Norwegian. This is a company Norwegian government founded all by itself in the 1970s. Early on in the industry, they determined that, gee whiz, this oil and gas business looks pretty good. There's a lot of jobs, it's good money, but they were noticing that much of those jobs on those offshore platforms were going to British folks for BP platforms. ConocoPhillips was out there as well, Shell. Not many Norwegians were getting the jobs. And so they decided one of the ways they would learn the business was to start their own oil company, which they financed. And it was there to learn the business, primarily to learn the business and bring jobs to Norwegians. It evolved rapidly. It was very, very successful, learned very quickly, and became very active as an exploration company and a producing company, almost to the point where it was excluding investment by others outside the nation. Norway found that that was not a good idea, and they decided to take Statoil private. So they put it on the New York Stock Exchange and the Oslo Stock Exchange. If you want to buy Statoil shares, you can do that. It's STO on the New York Stock Exchange, trading yesterday at $25 a share, has a 4% dividend, not too bad. Norway, however, the government retained majority ownership in it. They don't control it, per se, with elected officials. It has its own board of directors, but they own roughly 2/3 of the shares. And so now, rather than getting funding directly from profits of Statoil, they just simply clip the coupons, take the 4% dividend, which to them is $3 billion a year. Not too bad. More about Statoil. They currently have expanded. They operate in 34 countries. They are headquartered in North America, in Houston. And interestingly, when they moved to Houston, so did 140 Norwegian support companies. Norwegian-based support industry. There's a lot of Norwegians in Houston now, believe it or not. The number 2 export that brings the second largest amount of money into Norway after oil and gas, in fact, is that support industry and all that expertise. That's where their plan is that when oil and gas runs out in Norway, they're still in the oil and gas business, but worldwide. They are, of course, in Alaska. I'm sure you're all familiar with that. They opened their offices in Anchorage this past summer. They were successful bidders on 16 leases in the Chukchi. They share additional leases with ConocoPhillips in the Chukchi, or in the Beaufort rather. Now here's an interesting thought. Norway's government will likely receive more dollars from production in the outer continental shelf off Alaska than the state of Alaska will. Anybody know why? Well, that's federal waters, and we, as a state, do not receive a share of anything that's in the federal waters. Probably the best we'll do when the production facilities come on land, we will get some property taxes out of it. But Norway will, because of its ownership in Statoil, will receive more money than we will. Just a thought, something to think about. Here's a major lesson learned. Norway successfully attracts private investment to develop its oil and gas resources. There are 60 or more international oil and gas companies investing very heavily in Norway. Here's a slide that the Norwegians gave us of some of the companies that are working offshore there now, and you can see many of our friends that are working here. I'm looking and I see ExxonMobil, BP, ConocoPhillips, now working offshore. You've got Shell, onshore Eni. They're all working over there. What that means is that Norway really is our competition for capital. Each of these companies makes investment decisions. The question is, do they want to invest in Norway, or do they want to invest here? Now I'm going to show you why they like Norway. The number one investor in Norway's oil and gas development, believe it or not, despite all those 60 companies, number one is Norway itself. And it has to do with how they go about, it's part of their licensing system. The next 3 slides are the most boring to look at, but they're the most important slides I have to offer here. So I'll try to go through these carefully. This is their licensing system. They call it the licensing system. We might call it the leasing system, but it's different. It starts out years in advance. Well, Norway will select large tracts to make available for oil exploration. Remember that map I showed you? They might take a big section of the Barents Sea, say, well, this is an area we think has some potential. We'd like to put maybe 500 tracts up for lease over several years. So they first go into consultation with what they call stakeholders. Who are their stakeholders? Well, obviously the public, obviously the oil industry representatives, but also that includes fishermen who might be concerned about their fishing, what might do that. It would include environmentalists, who otherwise would sue them. It would include the communities onshore that might have impact from economic impact or construction impact. The point is, Norway meets and gathers all these people up in advance. And they may hash at it for years. When they're done hashing it out, they come up with an agreement, a document, a contract. And they take that contract to Parliament. If Parliament approves that contract to open that area for exploration with all the stipulations the fishermen, the environmentalists, the communities put into it, once that's passed by Parliament, that's it. That's the green light to go ahead with those stipulations and restrictions. There's no more litigation. Wouldn't that be nice? Okay, that's how they start. Then the next thing they do, Norway will conduct the seismic, the initial seismic. They will run those ships back and forth over those tracks and conduct two-dimensional seismic, which is not the highly detailed seismic that they use for deciding exactly where to drill, but it does provide enough information to a good geologist to say whether an area has potential or not. Norway owns that data. The last State of Alaska doesn't own that data. We don't know much about what we haven't leased out yet. They make those results public. You can find these online. The oil companies all look at them. It's public information. Norway also looks at these things and says, oh, you know, this one looks like it has the kind of geological formation very likely to have good oil or gas in it. We're going to take out an investment stake in this too. So all of you folks who want to apply for this, please know that you are going to have a partner. That partner is going to be Norway, and we are going to take maybe a 10, 20, maybe 33% ownership share. And what that means is, just like any owner, they're going to dig into their pocket and take out money and invest in that tract to the tune of 10, 20, or 33%. If it's a $100 million investment and they've got a 20% ownership share, they're putting out $20 million. The application period is open. The industry applies for a 6-year work license, and that's a very specific plan. The application consists of what are you going to do? Exactly tell us what you're going to do with this particular tract. You're going to look for this resource at this depth. Tell us how you're going to do, who your scientists are, who your work partners are. Tell us also that you have the financial strength to do this. And of course, tell us about your safety record. Norway has a far better than average safety record out on in their Continental Shelf, but it's not perfect. They've had some major tragedies, not spillages so much as platform disasters, and they've learned from that. They don't want to do it again. Continuing, step number 7, it's not really a step, but just to say, unlike our system, theirs requires no bonus bid. The basis of our system is whoever comes with the biggest check gets the tract. End of story. It's yours. They don't do it that way. It's all based on the work plan. There's also no royalty share that comes back to Norway. So right off the bat, you see, less costly to get into this game. Licenses are awarded based on the quality of the work plan and other qualifications, and you have a 6-year period to produce. They call it drill or drop. You finish your work plan